What does high volume mean in stocks? If you are interested in the stock market, then chances are you have heard the term high volume. When it comes to buying stocks, there are various terms that can be thrown around, which can make the overall process confusing for novice investors. So if you want to know what high volume means, then you have come to the right place, as this article has the information you need. Volume is a term used to describe how much a financial asset has been traded in a period of time. In stocks, volume is measured by the number of shares that have been traded. While in futures and options, volume is determined by the number of contracts that have changed hands. In most cases, traders and investors will use volume to determine liquidity, while also using fluctuations in volume in conjunction with technical indicators to present successful business moves. How does volume impact stocks? If high volume stock begins to rise, it means that there are more investors interested in the funds, with the demand elevating the stock to more serious prices. Volume is the number of shares traded over a certain period of time, which means volume is often quoted for one trading day. See also, is day trading good for beginners? High vs low volume. When it comes to evaluating a certain stock, investors will need to consider the volume to determine how hard it will be to sell their shares. Low volume stock. Stocks with low volumes tend to be harder to sell, as there is little interest associated with the assets. High volume stock. In most cases, stocks with a high volume and a rising price are easier to sell, as investors will be willing to spend more cash. If you encounter stocks with notably high volumes, then this could mean that something has changed that requires the investor's notice. When a stock price begins to fall, some contrarian investors may choose to buy their shares, even though this method can be risky. What does high volume mean in trading? In trades, volume can be used as an indicator of market strength. In the section below, we have outlined how traders can use stock volume. 1. Strong portfolio. When stock volume begins to rise, it demonstrates the market's interest, which can be used to determine the product's strength. In most cases, high volumes can be used to indicate the conviction of the traders, while also evaluating the condition of the market. 2. Exhausted market. Traders also use volume to determine whether the market is exhausted with the direction of a certain stock. However, this can also exhaust the market, as all investors have bought their shares and caused the interest to stagnate. 3. Bullish indicator. If the volume increases while the stock price declines, this could be used as a bullish indicator to determine the condition of the product. Final thoughts. Volume is used to measure the number of investors attached to a certain stock, which can be used to determine whether the price will increase or decrease. However, this does not mean that volume can be used to determine future reversals, even though it does offer traders a better understanding of the market and how it could change due to recent trends in stock prices. As we mentioned earlier, investors will find it easier to sell their stock when it has a high volume and increasing stock price, as this demonstrates the market's general interest in the product. My website is full of my tips and tricks, as well as information that I have always found interesting about crypto.